Most investors get stuck on a 30-year mortgage when they buy their properties. Here's why my client's going to be debt-free on his newly investment purchase that he's looking at in under 7 years and saving him almost $450,000 in interest. And here's the kicker. We're going to get his effective rate on his mortgage under 2%. Now, if you want to pay your house off in years instead of decades, you found the right page. My name's Sean Uehara. I've been a mortgage lender for almost 20 years, and I teach my clients how to use the First Lien HELOC to get themselves out of debt faster. This is the one strategy I wish I would have known when I got into the business decades ago, because this can help you pay off your home in years instead of decades, saving you hundreds of thousands of dollars in interest. So if you're tired of throwing away money on your mortgage payment and seeing all that interest go back to the bank, make sure to follow me and save this video because you're going to have questions on how it works, and I'm here to teach you how to do it. Here's our deal. It's a $645,000 purchase price. We're going to put 25% down. We're borrowing $483,750. He's been shopping around for interest rates, and he got someone to quote him a rate at 6.375%. He brings in about $20,000 a month, and we're also adding the rental income into this factor as well, which that property is going to bring in another $4,600. So the thing to remember is when you use the First Lien HELOC, the easiest way to comprehend this strategy, because it sounds too good to be true, is you treat it like your checking account. Anytime that you have money coming in, you want to deposit that money into the HELOC because it reduces your loan balance dollar for dollar. Whether you deposit $1,000 or $50,000, you're going to effectively lower the balance, which lowers the interest. And the big thing with this loan is that we're calculating interest on an average daily balance. So we want that balance to get reduced because it'll end up having us pay less interest on the mortgage. We pay less interest on the mortgage. We pay off the home in years instead of decades. That's how we get our effective rate under the 2% mark, which is what I'm going to show you. So again, we're treating this like our checking account. We got $24,000 going in. After all the bills, food, credit card, groceries gets paid, we've got about $5,000 left over. Here's the current mortgage at 6.375%. If he paid it off in 30 years, it's going to cost him over $1 million, $600,000 in interest. That's more than what he's even borrowing. Here's our strategy. That same loan amount, we're paying it off in 78 months or 6.5 years, saving him $456,000 in interest. The average interest rate that we're using to model this out is 8.3%, but because of how the interest is calculated, like I said earlier, we're only paying $146,000 in interest, which gives us an effective rate of 1.8% on this loan. And if you still don't believe that the banks are robbing us blind with mortgages these days, in 78 months, we're going to be debt-free. This guy's going to continue to buy more real estate with this line of credit. And look at this 30-year fixed mortgage. You would have only paid down $43,000. You still would have owed $440,000 on the home. You want to be debt-free like my client? Send me a DM and I'll teach you how to do it.